Michael Keeley coming to us from Salt Lake. Let's bring in Alan Nuckman, his chief market strategist at bullseyeoption.com. Thinking about a trade in a very different part of the market. We'll get there, Alan. Tell me about what you want to see this week overall. Are you confident in the stock market going into the biggest week, arguably all summer?
I just want to see more of the same. What's happened here is just exactly according to the Fed's plan. You've knocked down crude oil 20%. You've knocked down rates 20% in the TNX. And I disagree with you and Ben that I think a break below 275 is going to be very much a positive. That's going to be very helpful. You've seen the
for stocks for the 10-year. If the 10-year breaks down.
Yeah, and then you've got the VIX at 23. So it's not a matter of when gaps are going to be. It's not a matter of if gaps are going to be filled. It's a matter of when. And we saw the gap at 4,000 get filled in the S&P. So I've got a lot of positives. Now we just need to build out it a little bit more. Okay,
so you're still of the mindset that if we've got yields going down, stocks are going to like that, and that for sure has been the case here the last month. But that two-day rally last week, should that not make us question the reasoning for these yields going down? It happened right after jobless claims. Markets seem to hate that.
I am not a why guy. I'm a how guy. How is the market going to move? I could care less about the why. But the fact is that for me is a sign of stability. The rates continue to decline. We've seen the mortgage rates come back down to the 5% level. So they overshot on the upside as rates did, as markets often do. And if you look out, we've been talking about looking at the futures markets go all the way up to 24, 25, 26. Ben alluded to, they actually have rates coming back down to 3%. So the market's priced all this in, and we're seeing continued earnings growth. Now, if we're getting earnings growth and prices aren't going up, then, there's some great value there, and that's what this play is again today.
Got it. Okay. All right. So you're not asking why you're following the relationship, and hey, that relationship has generally been working so far, but not Friday. Yields dove and stocks dove too. Does that not make you question it?
A 1% pullback. We were still up 3% on the week. So, it knocked off some of those profits is all that was.
Okay. All right. Let's talk Alcoa. All that said, though, you're not out here buying the index, Alan. You're going to buy metals companies.
There's better risk reward, and this is a great example. This stock is 50% off its highs, but it's still up 25% for the year. So again, it's about risk reward. This is a good value here. It's been trading between 40 and 50 for a month. That targets a breakout to 60. There's another gap at 55 to get filled here. So a lot of positives to look at, and the way I'm looking to play it is, again, with that in-the-money option. The $40 call for October gives me 3 months of time. It's trading about 10. So it is a bit pricey, but it's like being long from 40, and this stock was at 98 just in March.
Okay. Now, earnings, Alan, I know you're not a why guy, but already reported. I guess you think that if we're up after it, that means the market's okay with it, time to move on, time to buy it. Had a nice little pop on its report.
Okay, if you focus on earnings, okay, you would have no idea that everybody's trying to talk themselves into a market, crash. The earnings continue to grow. That's what you want. You want corporations to make money. They've got greater margins. They've got greater revenues, and the pricing power is there. Hey, go buy a can of Coke. A can of Coke now costs $2. What's in Coke? Water and sugar? Did something happen that I didn't notice? It's called pricing power. Companies are able to do that. And that's a positive for corporations. Now, the consumer is still doing extremely well. Yeah, they're concerned, but if you didn't buy a house or refinance the last 5 years, that's on you. That's not on the market.
Okay. All right. That's on you. From Alan Nuckman, a direct message to the home buying consumer.
That's going to make me look bad, isn't it?
No, never. Nothing can make you look bad.
We have rates.
The only thing that's going to make you look bad, Alan, is if yields die below 2.8%, stocks sell off.
All right, we'll see.
I appreciate it, Mr. Nuckman. Always fun chat. Thank you, sir, with the Alcoa trade after earnings. It's looking pretty good after the port. AA cruising higher. Alan's chief market strategist at bullseyeoption.com.